the IT listed, or the technology group Altron, had an annual horribilis, or annus horribilis, I'm not sure if I'm pronouncing it right. Its full-year results were adversely affected by strike action in its manufacturing business, a market decline in orders from Eskom, and a challenging environment. This is with regards to market conditions in its telecommunications sector. Joining us to discuss these numbers and its turnaround strategy is the company chief executive, that is Robbie Venter. Robbie, thanks for your time. I just want to pick up on something that I spoke with our market watcher, with David Shapiro. The fact that you are in transition and you are moving away from being a family-owned business to an independent management structure. Tell us about that.
I think, you know, given some of the challenges that we faced during the course of this year, the board had to sit down and, along with management, really review our strategic direction. And the outcome of that review was a couple of things. The first thing was that we needed to focus on our core assets and identify those assets in our business that are non-core, and we made some announcements yesterday in that regard. The second part was really in our power tech side of the business to explore some partnerships with global multinationals, which we are doing, and then also the recognition that you know, as part of the future and over a period of time, where the family is as a controlling shareholder in the business, there really isn't a third generation of potential successors, and over time we need to consider how we transition to a independently managed business.
So this transition, you mentioned a couple of announcements that you had made. The decision to sell your subscribers from Altec. Just give us the rationale behind that and what this means for Altec Autopage.
Yeah, so as part of that strategic review, we took a deep dive into the Altec Autopage business and had a look at some of the fundamentals around the market and the trends that we were seeing. And a couple of things had moved in a direction that made that business model a much tougher business model. The mobile termination rates were announced and cut quite dramatically. That doesn't impact Altec Autopage directly, but it impacts the operators, and then obviously it flows through the system to the retail level. So we saw some pressure coming from that, and we've also seen a strong maturing of the voice side of the business, and that's not a new trend. That's a trend that's been there for some time. The strategic view always was that data would pick up the gap of voice, but the pricing pressures and deflationary pressures in terms of data pricing, clearly in our view that wasn't going to happen to the degree that was maybe expected at one point in time, and therefore we took the decision that we would exit that business, which we announced yesterday, the GSM side of it.
Okay, let's now talk about some of the pressure points that we've seen. Your multimedia business, there must be some frustration there because Africa has lagged behind when it comes to DTT. This has cost you.
Yeah. Very much so. You know, specifically in the second 6 months of this last financial year, we saw regulatory delays. We saw one of our major customers was having delays in terms of particularly DTT programs in East and West Africa, and obviously that impacted on our demand. And then, you know, on top of that, we have the delays in the South African DTT program, which we're very well positioned for. We've been appointed as a Tier 1 manufacturer for that DTT rollout. But again, the delays are well publicized in that particular area.
I'll take note, the uptake of that particular segment was not what you expected. What are you going to do to turn that around, and how significant is it going to be going forward?
I think so. As part, again, and it was also part of that strategic review that the board undertook. I think we saw that the uptake in the retail channel to market, and remember there's always a number of different channels to market, but in the retail channel to market we saw the uptake slower than what we expected. You know, the product I think is a good product. Great technology, in a good space. Video on demand is coming, but maybe even a little bit before its time. The product, I think, trying to do a lot of things, you know, home automation and content and delivery, etc. So our focus now, in terms of the LTech node, is that we are exploring and are at advanced stages of exploring a partnership arrangement in that particular area, which will give a much better and new channel to market in addition to the retail side.
Robbie Venter, thank you so much,
Thank
Chief
you.
Executive of Altron. Next time we speak, we do hope that this turnaround strategy will be very much underway. Thank you so much for those set of results.